Welcome, ladies and gentlemen, to Commodity TV. A great update here. Q1 numbers are out of Endeavour Silver. You know, Endeavour Silver, one of the top 10 silver producers, primary silver producers here in the world. And with me here is directly from Vancouver, Bradford Cooke, the co-founder and CEO of the company. Bradford, welcome. How are you today?
I'm very good, Jochen. How are you?
Super, perfect, all fine, everything is good, sun is shining, sky is blue, except we have to stay home. That's the only thing. Yeah, congratulations, first of all, to your Q1 numbers. I think they are much, much better than everyone would have thought. And I think the most important thing is that Guanacevi is really turning, which you will show us in a second here. And you have a great presentation prepared, which I will upload now. Let me see, here we are. And yeah, you have the full control. I would say the floor is yours.
Wonderful. Thank you very much, Jochen. And for your audience, let me just say that Endeavour Silver normally does not do this type of shareholder update with our quarterly production results. We normally reserve it for our financial results. But given the current state of the world and the feeling that we have a lack of steady communication with our shareholders, we thought this would not only be a good time, but also a very good way to connect with our shareholders. So thank you, Jochen, for this. This is our first quarter 2020 corporate update video webcast. And as I go through the slides, I will be making some forward-looking statements today, as usual, so you are duly cautioned. And before I dive into the quarterly performance, let's just touch on the value catalysts for management to create value for Endeavour shareholders this year. They are really fourfold. First, and I think by far the most important, is returning our 3 operating mines in Mexico to profitability. We had a very challenging year last year. We initiated turnarounds at each of the 3 mines to increase their mine outputs to their plant capacities. And we're now developing new ore bodies. And I'm pleased to say that this process of returning the mines to profitability is well underway. Number 2, excuse me, we have perhaps one of the best organic growth profiles in the silver mining sector. And Terronera, our project in the west coast of Jalisco state, is not only going to be our next core asset, it has the potential to be our largest and lowest cost asset. So developing Terronera is certainly key to shareholder value. Thirdly, we acquired some properties adjacent to old high-grade ore bodies at our Guanacevi mine last year, and that gave us instant access to extensions of old ore bodies. We think we can do the same again at our other mine in Bolanitos. Last but not least, we have a portfolio of world-class prospects in Chile, and our goal is to drill a world-class deposit over the next couple of years. So 4 value catalysts for 2020. How did we do in the first quarter? Well, let's have a look. Our consolidated production was in line with our guidance prior to the suspension of operations due to a government mandate in Mexico. We produced on plan, actually well ahead of plan, and consolidated production was a little bit lower than the first quarter last year, only due to the suspension of mining operations at our 4th mine, El Cubo. So we did have to withdraw our production guidance last week as a result of the government mandate to suspend the mines until April 30th. But if the suspensions extend beyond April, we feel we have opportunities to reduce our carrying costs while we wait out this period. Let's go to the individual mines. Guanacevi outperformed plan, significantly outperformed plan, as you can see from the chart above left. And it wasn't just throughput, but ore grades and gold recoveries that were all higher, not only than planned, but compared to the first quarter of last year.
Bradford, what was the reason for such higher ore grades? I mean, 36% in silver and 67% in gold. This is outstanding.
Yeah, so part of the turnaround that we're talking about was closing the old, deep, low-grade mines, which were really dragging us down last year. We accomplished that closure in January because the newer, higher-grade mines were developed and ready for production. And you can see in the chart right that our new El Cristo discovery is already 40% of our production in Q1. Belache also 40%, and Santa Cruz Sur approximately 20%. There's still some capacity available in the plant. We're still ramping up to the plant capacity this month and next, as soon as we get back from the suspension. And we do expect to fill the plant for the rest of the year after the suspension. So good news from Guanacevi. It was a real drag on our performance last year, and it's now the leader of our group. Bolanitos, our second mine, however, also had similar problems last year. We also initiated sweeping changes, but only in the third quarter last year. So it's about 1 to 2 quarters behind Guanacevi in its own turnaround. Therefore, it's underperforming plan and also underperforming its first quarter last year. We did, however, resolve an arsenic issue that plagued us in the flotation circuit last year. We've rectified that, and the gold recoveries as a result are now improving. We feel that the operational turnaround at Bolanitos is about half complete. We need another full quarter after the suspension is over to really bring this mine up to its plan for the year, and then it should do just fine because it is a gold-rich mine, and of course we all know that gold is doing wonderfully well right now. Last but not least, in terms of the operating mines, our newest mine, El Compas, operated close to plan in the first quarter. The production was actually well above plan, but the grades were below plan, so on balance it was close. And in this mine, we are continuing to tweak primarily the grades and recoveries because we're already at the plant capacity. We've gone through a transition in March and here in April from contract miners to employee miners. We're also transitioning certain areas from cut and fill mining to long hole mining. All of this to really reduce our costs. And we do expect that El Compas will come into the black this year as well. We're exploring a new property in the area. Calicanto and Capstone, the large copper company, has a discovery called the Malanoche footwall vein, which they've now traced onto our property through a joint venture with Endeavour. And they have a wonderful copper discovery. We're now going to explore the top of that MNFW vein for gold and silver. And moving on to the development pipeline, I mentioned already Terronera. We made good progress in the first quarter. At Terronera, we appointed Ernesto Lima as our new Director of Project Development to oversee the development of Terronera as our next core asset. We received some summary economics from a new engineering firm on last year's pre-feasibility study. Unfortunately, they also used different assumptions, so we ended up with 2 studies that weren't comparable. The economics that delivered in March were positive, but not as robust as last year's study. And we asked Ernesto to do a full review. He actually got both engineers talking to each other, but he couldn't resolve the underlying differences between the 2 studies. And so he recommended that we simply take the final stage of optimization of the pre-feasibility study for Terronera in-house. And Ernesto has done this many times. He's now leading the final review. He's looking at every assumption. And there are many, many areas that he's now recommended that we can improve the economics. And we hope to bring this back to the board here in the next 2 months. Looking forward for the year, subject to a very positive final optimization of our PFS, then we're looking at the possibility of commencing a full feasibility study because it's less than a 1-year period and less than $2 million. So that would be a final de-risking of the project. It would also open up several new project financing alternatives.
Bradford, one question. How long do you think it would then take to bring Terronera finally in production? Just as a rough assumption, of course. Because I know there's some data is missing in the feasibility study, of course. But what is your feeling like, 2022?
We still haven't changed the 18-month construction schedule. And all we're adding is a feasibility program in front of it. So 18 months plus 12 months, about 30 months from today, I think we could see the commissioning of the operation.
Okay.
And here's a list of all of the, not all actually, but some of the main areas where we feel we can make significant improvements on the existing pre-feasibility study. Certainly mineral reserves were one of the problems between the 2 studies because the latest economic study, the engineers chose to redo the reserves and they reduced them. And Ernesto studied the 2 and said that there was no reason to reduce the reserves, that the original study was actually the best estimate. So just simple things like that is what Ernesto is going through at this time.
Okay.
So last but not least, in terms of things that management can do this year, I mentioned already the acquisition of some land adjacent to high-grade ore bodies at Guanacevi, the ability to explore, develop, and start production from effectively extensions of old high-grade ore bodies in a matter of months at Guanacevi, And that's now become, I think, a very good model for what we want to do this year at Bolanitos. There are clearly properties covering extensions of ore bodies at Bolanitos. And we are in discussions now to try and make at least one of those acquisitions. Moving on to Terronera, we've been busy expanding our land position at Terronera, and we're just waiting for the Department of Mines to confirm the claims that we've acquired, and then we'll be able to talk more publicly about them. And Ernesto is also looking at adopting new technologies into the new Terronera model. Last but not least, we're always shopping for ways to make our business bigger and better through mergers and acquisitions, either at the asset level or the corporate level. And here you see a list of high-level parameters. So let's move now to something a little bit more general to address the global situation, risk assessment and value opportunities, because as we all know, out of every challenge comes opportunity. And I feel that this period right now is very interesting for the silver group in general and Endeavour in particular. I'm going to move on to the COVID-19 period because that is what's uppermost in people's minds. And I think the risks are pretty readily apparent. I mean, the health risks clearly, especially to the high-risk groups, the elderly and people with existing health conditions, also medical personnel. The economic risk, there's been a massive downturn in economic activity worldwide. And just restarting it doesn't get us back to normal. There's a massive amount of fiscal stimulus already announced and more will be needed. Last but not least, due to this 30-day suspension of mines in Mexico, everybody in Mexico now has a liquidity risk with no revenues but significant carrying costs. We're in good shape. We have a decent balance sheet, no long-term debt, just some term debt on equipment. And so we're not overly concerned, but nobody likes to spend money without making it.
That's right.
On the right-hand chart, you see an estimate by RBC of the amount of silver currently on the sidelines, silver production currently on the sidelines. On an annualized basis, they estimate there's 115 million ounces of primary silver production currently suspended. Now, there's about 850 million ounces of annual mine production, and about 70% of that is byproduct production. So the 115 million ounces is almost 50% of primary production, companies like Endeavour. Whereas the majority of silver production being byproducts, we just have to guess that if there was, say, 25% of byproduct production on the sidelines, that would add up to about 30% of global supply currently suspended. So we talk about the crash in demand for all commodities due to the economic slowdown, but there's also going to be a crash in supply, particularly silver. So our response, in fact, I'm going to go ahead and then come back to that one. Our response to the COVID-19 was, I think, well prepared. We began in earliest March to develop and then implement plans, not only to prevent the arrival of COVID-19 onto our mine sites and into our workforce, but to respond if we ever found any positive cases. As we've been very active, we formed an executive committee in Vancouver, an executive committee in Mexico. We were meeting initially daily. We arranged very quickly over a month ago for the medical staff at each of our sites to start checking for symptoms, taking temperatures of every person arriving or leaving the site. We had a trial run. We had 2 employees about 3 weeks ago that had symptoms, and we swung into action, isolated them, isolated their colleagues, sterilized their workplaces, only to have them turn out to be false alarms. Thankfully.
Thank God.
We've done a lot to keep our employees safe. And now, of course, they're staying safe at home during the suspension period. To keep the business safe, we started cutting costs. We temporarily suspended non-essential travel, non-essential exploration, non-essential hiring. We kept essential people at each of the sites, obviously, to maintain safety and environment security and equipment maintenance. But it's challenging to keep social distancing in an underground mine. We've done the best we can, and so far, so good. And we're also helping out the local communities, providing supplies and masks, cleaners and disinfectants, giving them education programs on what they have to do to stay safe, and special emergency kits for high-risk households. The Mexican response was unfortunately not quite as quick as our endeavors, and it was only last week that Mexico finally responded by declaring a national health emergency. As a result, all non-essential businesses shut down, schools shut down, We're having to pay full base wage of the employees that are staying at home. And the population, of course, is being encouraged to stay at home. The National Guard actually had to intervene in one of the mines that was staying open. Not ours, but Mexico's largest mine was actually suspended. And this will have an impact on the Mexican economy. Clearly, if tourism and oil and gas are the top two industries, they're going to take a hit. There is one benefit in all of this. Mexico has in recent years hedged all of their oil production every January. So this year's production for the entire country of Mexico is hedged at $47 oil, which means that they're in a better shape than most so oil and gas production. I have to say the healthcare system is actually pretty good in Mexico, but they were not prepared for this, and they're moving fast to handle the steep part of the curve that Mexico's on now. AMLO, the president, announced a fiscal stimulus package, but it was virtually non-existent. He basically boosted resources for the health system and for what he calls micro businesses, but there's basically nothing for small and medium-sized businesses or the self-employed. So Mexico is in the steep part of the curve. It's about 3 weeks behind America. We do hope to emerge off the top of the curve here by the end of April, and there's a hope then that we can get people back to work in May. Let's move now to silver and gold. A month ago, we were talking about silver price risk, with silver going from 18 to 12 in 1 week.
I think it was 1141 was the low. Crazy.
It was crazy. And yet here we are talking about silver and gold entering into a new cycle already. And they had already started that cycle last August, so I don't think it's any surprise. The big surprise for some people was that gold and silver actually got sold off during the market panic of March. And I just want to point out that is absolutely the norm. When there is a market panic, everything's for sale. People rush to cash. Everything gets sold. But gold and, to a lesser extent, silver are always the first sector to bounce back. And look at gold. It's at a year high. It's at a multi-year high. It's recovered everything it lost from the market panic. Silver has gained back 2/3 of what it lost in the market panic. And Endeavour, we're producing about 50% of our revenues from gold this year and 50% from silver. We use $17 silver and $14.50 gold for our guidance this year. So we're offside on our silver revenues right now, but we're way ahead of our gold revenues. So all in all, there really shouldn't be any net impact on our revenues, thanks to gold. So what is the gold price opportunity? This is a high-level statement, obviously, but on the left you see a chart going back to 1900 on what is effectively the depreciation of fiat currencies relative to gold in the last century. And every currency known to man has devalued over the course of the last 120 years. Why is that? Because governments invariably prefer to print money rather than pay off debt.
Like today.
And so on the right chart, you see the S&P action since 2008, and of course the major step down in recent months. But look at the Fed Reserve balance sheet. And that doesn't even include everything they've announced. That was just to the end of March. So the point is, if the Fed's going to jump their balance sheet by 30, 40, 50% here, which they're in the process of doing, what do you think that's going to do to the US dollar? What do you think the euro is going to do when the European community adds more to their fiscal stimulus? Japan, China. And so I go to the old quote from JP Morgan: gold and silver, they're nothing but money. Everything else is credit. So will history repeat itself? I guess I'm betting yes. The chart right shows the performance of the S&P versus gold in 2008. And of course, both of them got dragged down by the crash of 2008. But look who was the sector leader for almost 2 years coming off the crash. It was gold. And I do believe the macro factors today are very similar to 2008, looming global recession, central banks cutting interest rates, unprecedented monetary stimulus. All of this boosts the appeal for gold and depreciates fiat currencies. There is a different thesis here for silver. It's not just a form of money. More and more in recent decades, it's emerged for its industrial uses. Excuse me. And silver is not just produced from silver mines. It's produced primarily as a byproduct of base metal mines. But base metals are trapped in a bear market. And silver is a green metal, so it supports rising industrial demand. You can't have solar panels and electric cars without silver. So all of this actually places upward pressure on the demand for silver, while there's downward pressure on the supply for silver. We're setting up almost for a perfect storm. And so how do you tell where you are in the new cycle for gold and silver, the new financial cycle, if you will? Again, we just look back to the ratio of gold and silver back in 2008. And coming off of the 2008 high in the ratio, at the bottom of the crash, the ratio hit 85. By 2011, it had declined all the way to 31. So silver was a significant outperformer relative to gold after the crash in 2009, 10, 11. We have just finished a crash here in 2020. The ratios come from 125 to 110. What do you think is going to happen to the ratio from here? Silver is going to outperform. We just have to be patient. It always lags gold. Why? Because gold is money and nothing but. Silver has an industrial component. Therefore, investors go to gold first, but silver always follows. Endeavour, producing only gold and silver, has a sector-leading beta of our share price to the silver price. So if you want leverage, Endeavour's the place to find it. And that's it, basically. I'd like to wrap up by just reviewing again our value catalysts, our long-term plan for future-proofing our business. I've already pointed out that we're into a new cycle of rising precious metal prices. I've pointed out that we're in the middle of these turnarounds to generate profitability at our 3 mines. We're now developing our organic growth profile, best in the business, to bring 2 new mines into production over the next 3 to 4 years. Adopting new technologies, we maintain a clean balance sheet, and exploring Chile for potential world-class discoveries. All of that adds up to one of the best value strategies in the silver sector. So thank you very much, and I'd be happy to take any questions.
Fantastic. Well, Brad, thank you very much. It's a very compelling presentation. I have already a question, as I saw now your 3 mines producing, and as said, Guanacevi is working quite well. Can you say already something on the group AISC per ounce of silver or silver equivalent? Is that possible? Meaning, do you have the costs also under control, like you have brought up now the production, you have better grades, better grade control, etc.?
On a consolidated basis, obviously, we'll have to wait for the numbers May 12th, but we know obviously from our month-to-month performance that we're doing better. And Guanacevi is back in the black. It's a real sector leader. The only drag on Guanacevi is actually that our newest high-grade ore body has a very high royalty on it. So that goes into the operating cost. So it's not as good as it could be if we didn't pay that royalty. But nonetheless, Guanacevi has emerged. And Bolanitos is still losing money, but less and less each month. And we do feel comfortable that after the suspension is over, that within the next 3 months, we'll get Bolanitos where it needs to be. Again, Bolanitos is gold rich, so it's not going to hurt from the silver price. Mm-hmm. And the same thing with Compas.
Mm-hmm. Fantastic. I just heard 2 hours ago that Canadian Malartic, for example, restarts production. Of course, that's an open pit. But when do you think you can restart? Is it like until the end of the month, the suspension? Do you think that you can go on full throttle then? Or do you think there are risks that it might be longer?
So the official word was that we're suspended from April 1st to April 30th. Mm-hmm. The unofficial word as of yesterday, and this was actually something the president said on Sunday night, he's considering the first step to unrestricting people in Mexico on May 10th. And interestingly enough, there are 2 Mexican mines, very large Mexican miners, who argued successfully that they're essential businesses, that their businesses were too big. For instance, a smelter operation, you can't just shut a smelter down in a day. And if you did, it would take months to restart, because what happens to all the material in the smelters? Well, it just turns to rock. Mm-hmm. So, yeah,
exactly.
So they're still operating. And I guess my hope is that if they can get through April without any positive tests for COVID-19, they become a shining example of how an industry can stay safe during a high-risk period like this. And that would give encouragement to the government to allow mining to come back on.
Yeah, because I could imagine, as we have the same problem here in Europe. I mean, to shut down an economy is one thing, but on the other hand, you got to pay for that. And it's always nice when you propose like hundreds of billions of dollars or euros you're putting into the economy. Somebody has to pay for it finally. And it's probably then 2 or 3 future generations now. So this is why I think, we have to find a way back to normal sooner than later. And Mexico even more, because as I saw in your presentation, there's 25% comes out of tourism. in their revenues. And so this is zero now, right?
Well, so those numbers were from last year, and it was 15% tourism, 35% oil and gas. With oil, if they hadn't hedged their oil and gas, $22 oil would have reduced the oil impact on GDP to about 20%. It's a massive change. Yeah. So they're very fortunate to have hedged at 47.
That's crazy. Can you maybe say something also on the supply side? On the one hand, on silver, you already touched on that. But let's say supply-demand balance. What is your feeling? How fast can you restart to really overall in the industry to get to the full mine supply on the one hand? And how do you think would demand develop with the restart of the economy? Because to my understanding, what I heard also from the big car makers in Germany, for example, they have to sell and to produce e-cars, like plug-in vehicles, like hybrids, etc. And for that, we need a lot of more silver than normal, right? And also with solar panels, there's a lot going on there still, like also in China, in Saudi Arabia, etc. And so could you imagine that this supply crisis, I would call it, may be the ignition point that silver really moves above the $20-25?
So let's talk about the two components there, demand and supply. Demand has crashed because basically China shut down, so everybody else followed. Demand will come back, but only over months. So demand having an impact on price will only occur over months. The real impact short term is from the supply side. And as I pointed out, there's a lot of supply, 20 to 30% of total supply currently on the sidelines. And if you take 1 month of supply off the market, that's 100 million ounces. You don't make that up very quickly. So I think there will be a price spike. I think it could come in the next quarter, and but then it'll settle down. I don't think it will. It'll come back and start to lag gold again until those above ground inventories are taken off by taken up by the industrial demand.
What is your personal price target for silver, let's say in the next 12 to 24 months?
So again, I'm going to go to gold first because the gold chart is very clear. The real resistance on gold is at 1890 plus or minus, just around where it stalled out in 2011. We can't use that analogy for silver because silver went into a bubble in 2011, went all the way up to $49. However, there doesn't appear to be a lot of resistance in the silver chart until 23. There will be some at 20, and we're sitting right now at 1550. So I think that we'll lag, and then we'll jump. And that jump will probably test 20, test it again, and then break through this year.
Fantastic. Love that. That was a great final word. Thank you very much, Bradford. Congratulations on your really fantastic improvements. And what I personally like is you were always talking also last year and also in January when I interviewed you. You said already we have done the measurements, we have taken action, and now we see the results. And this is fantastic. This is honest. This is how it should be. I would say just keep it going and make sure that you get Terronera as fast as possible into production.
We're moving.
Super. Fantastic. Great. Thank you very much, Bradford. Yeah, ladies and gentlemen, that was Bradford Cooke, co-founder and CEO of Endeavour Silver. Now, he's silver gold producer, now 50-50 with gold and silver since this quarter, under the top 10 in the world. And you heard it, they turned around the mines. They turned around, especially Guanacevi, which was one of the worst performers for the last 18 months, I would call it. And now the mine is making money again, and this shows that a good management, even if it takes a bit longer than initially thought, is able and capable to really turn a mine and really to turn the business. And this is what we like to see. 3 mines in production, 1.5 million ounces of silver equivalent were produced in the first quarter, and hopefully the shutdown of the mines will end on 30th April latest. And so I think Endeavour is full on track. But what is even also very important, and what we have seen with a lot of companies we have interviewed the last 3 weeks, important is that you have almost no debt or no long-term debt, and that you have enough money in the bank to really sustain a certain amount of time. And this is also here the case with Endeavour Silver. Probably a great idea to check out the company. Thanks for watching us, and Bye-bye from Switzerland.